the way I see the big beautiful bill is the following. The government needs to have funding, right, in order to function. The government is always going to look ways for it to fund its operations, right? You have the Treasury, and then you have the IRS, which is basically the operator on how the government is going to collect the money and send the money to Treasury. Then the Treasury is going to then send the money or allocate funds to different agencies in order to operate the government, right? That's the broader way of you seeing it. But then you know that there are lobbyists and that there are interests in the world, right? Like corporations are going to have an interest, small businesses are going to have an interest, unions are going to have an interest, individual taxpayers are going to have an interest, and so forth, right? So then the government needs to make sure that there's plenty of money coming in order to operate. But at the same time, the government wants to make sure that it's not putting too much pressure on any individuals, business owners, corporations, etc. Government wants to make sure there's a level of a balance, if you will, on how it collects its taxes, right? There's tariffs, which is a whole different conversation. For this conversation here, we are talking about primarily income tax. So now that you know the big beautiful bill passed, you want to think about, okay, this is the law, this is the rule. Your role, your idea is how to leverage it for your advantage, right? Like, okay, this is what's given, this is what the government is saying, this is what's legal, and this is what you're able to utilize, this is what you're able to leverage in order for you to have X benefits or in order for you to have lower taxes, if you will. So if you are a business owner, you are an entrepreneur, that by itself is risk management, right? You have payroll, you have marketing, advertising, servicing clients, operating cash flows, year in, year out, month in, month out, like all the time, right? But you know, there's a level of taxation that you know that you need to comply with. If you're an individual, you know that you have your family, you have your household, you have your house, cars, mortgage, credit cards, food, shelter, insurance, I mean, you name it. And then you have taxes, right? So everybody, it's going to have an impact on your taxes, if you will. What you want to do is you want to make sure that you're utilizing it properly in order for you to minimize taxes. And also you want to make sure that you're using it legally. So why don't we talk about some of the benefits, some of the rules and some of the benefits that the big beautiful bill includes, so that way you have an idea on how is it that you can leverage it going forward. So one of the important ones is the standard deduction, right? It's going to be permanent. So for single taxpayers is $15,000. For married filing joint is $30,000, right? This is important for you to know because you know that when you get your W-2 income or your K-1 from your business or your 1099, you know that if you're single, you get to have a $15,000 standard deduction, or if you're married filing joint, you get a $30,000 standard deduction. So automatically the government is giving you a break, if you will. If the government is giving you that break, that means that there's going to be lower taxes just by having the standard deduction. And remember that you have standard deduction or you have itemized deductions. Standard deductions, $15,000 or $30,000 for a married filing joint. Itemized deductions will kick in once it crosses the minimum amount for the standard deduction. Now, let's talk about the child tax credit. So historically, as of right now, it was $2,000. Now it's going to be $2,200. So if you have a child, now you know 2025 going forward, your break is not going to be $2,000. It's going to be $2,200. Also, if you're going to have another child in the future, $2,200 is the benefit. But now that we're talking about new childs, right, in the family, newborns in the family, the government going forward, 2025 through 2028, it's going to fund a tax-deferred account with $1,000 for a retirement for the newborn, right? This is to kick in a wealth building legacy, if you will, on new families going forward. I think that's the approach in the right direction. Another important one, in my opinion, is the state and local tax deduction on your itemized deductions. Historically, it was $10,000. So your limit on your itemized deductions on the state tax matters or state income tax matters was $10,000. Now it goes up to $40,000. It's a 4x. So if you are in a high income tax bracket, there's a $30,000 delta. It's going to be a very nice break. So this is a significant break. So keep that in mind. And my senior friends, this is a very interesting one because if you're 65 and older, you could qualify for an extra $6,000 deduction. So if you have the standard deduction, which could be either $15,000 or $30,000, you could potentially qualify for an extra $6,000 if you're a senior citizen. $6,000 break that you're having 2025 going forward, a break that you didn't have before. So this is good. Another important change is the income that comes from tips. right? So there's industries that, like the service industry, restaurants, hospitality, that employees receive tips, and that's the bulk of their income is through tips. Well, now you get to have up to $25,000 break on your tip income. And this is significant, right? Let's say your tax rate is called at 20%. We're talking about potentially $4,000, $4,500, $5,000 tax break by having this deduction. So bear in mind, if your income derives from tips, you get to have up to $25,000 in breaks if your income comes from tips. Another interesting one is for individuals that they qualify for overtime, right? So there's a new break with a big, beautiful bill that you get to deduct up to $12,000 of your overtime in your taxes. So if you get paid regular time and then you have overtime, you get to have a break on your taxes going forward because part of your income comes from overtime. Another interesting one is the car loan interest deduction. So you know the EV credit is going to go away in September of 2020. However, the government is putting a blanket tax deduction on the car loan interest for the next 3 years. So 25, 26, 27, and 28. So it applies not only to EVs, but it applies to all the cars. So if you're an individual, you're not a business owner, you're an individual taxpayer, and you're buying a car, you're going to get a break on the loan, on the interest on the loan on the car, up to $10,000. So as you guys see, there's good information out there on the big, beautiful bill. I believe that if you utilize some of this information, you're going to be able to save a lot of money in your taxes. And the important thing about saving money on taxes is the following, right? If you're running a business, you get to have more profits, more cash flows in order for you to keep operating. If you're a family, individual taxpayer, your family gets to have more money for you to operate your household. So utilize this information for your benefit, leverage the big, beautiful bill. And of course, if you want to have more information, click the link below and you'll get on a call with one of our reps and that will give you additional information that's going to help you with a big, beautiful bill, help you make decisions for your taxes, and we'll see you soon.